What if I told you that there was a method to reliably pick your next buy and sell targets for stocks, gold, Bitcoin, pretty much everything? In fact, I used this method to make 50% gains in Palantir and Spotify in less than 2 weeks. My name is Eric, my nickname is Irk, and I've been investing in stocks since 1998. You've likely heard the investing adage, buy low and sell high. But this is one of those concepts that's both simple and easy to understand, but also hard to execute in practice. Why is that? The problem is when the stock market crashes and gives us good buying opportunities in our stocks, it feels awful. Every single stock market crash feels the same in one key way. Every crash feels like this time is different. It really is going to be the end of the world. However, I do have a methodology that helps me pick my buy and sell targets for every single one of my investments. Now, it doesn't work 100% of the time. Nothing does. In fact, if you ever hear somebody try and tell you that there is a 100% guaranteed way to make profits or to be able to buy at the right time in the stock market, they're trying to sell you something and it's a scam. First off, let's take a look at Palantir Technologies. I bought Palantir at $21.45 on August 5th. Right during the crash. Then, less than 2 weeks later, I sold it at $31.80 on August 16th. This locked in a gain of 48.25% in less than 2 weeks. But how did I know where to buy it and where to sell it? Was this just an arbitrary decision? Why would I know that that was going to be a bottom? If you look back in the past, you can see that Palantir has regularly experienced levels of support here. What this means is that there was a lot of price action of people buying and selling Palantir when it came to this particular price. And what this also means is that people are watching this price as a possible way to buy Palantir if it pulled back that low. The same works in reverse when it comes to profit taking. If you go way back in Palantir's past, you can see that there was a lot of resistance right around these levels. This was where people took profits, and Palantir couldn't break through this level of resistance. Now, there are a lot of people out there that will tell you that using charts and technical analysis is like astrology for investors, but that's not the case. Part of the reason it works is because thousands, if not millions of people who are participating in the stock market use this and see those levels of resistance and support. The easiest way to identify potential levels of support and resistance is to switch to the monthly view. Starting with this, you can see if we were trying to find levels of support, we would use the wicks that pull down on a monthly chart. These were levels that were real key support, where Palantir found a lot of buyers and then ended up bouncing. And you can see in reverse, we can also identify potential levels of resistance. These were areas where buyers turned into sellers and started taking profits. You can keep using this to identify particular key areas of support. For example, these 2 months right here almost bottomed at the exact same spot. So that is a very key level of support. We then go further and identify even more levels of support that we might be able to buy at should it ever pull back. Now, is it guaranteed that Palantir is ever going to pull back that far? Absolutely not. As an investor, it's up to you to determine exactly how aggressive or conservative you want to be when it comes to building your position. There's no promise that a level of support will hold or that a level of resistance won't be broken and that the stock could go higher. However, in this particular case, since I had made nearly 50% in less than 2 weeks, I had to sell some of the shares that I had bought. That's just a significant gain, and my discipline requires I take profits. Going back in the past, you could see that there were key areas of resistance. When Palantir first came public, it shot up to $33.50 and pulled back. This past Friday, it hit a high of $32.75, which was a point of resistance. Now, it's always possible that Palantir could break through and even come up to $39.22 or make a stab at its all-time high up here at $45. However, if you have a significant position with a lot of profits in it, trimming a little bit will not hurt. No one ever got hurt taking a profit. It is always a wise idea. Naturally, now that I've taken those profits, I actually am looking at adding back to my Palantir position if it ever pulls back to $21.23. And since I want to be a little bit more aggressive, my next buy target is a bit higher than that level of support. Since that was the low that Palantir saw on August 5th, you can bet that a lot of market participants are going to be eyeing that particular spot to buy if Palantir ever pulls back. Since I want to ensure that I can replace the shares that I sold, I'll actually buy quite a bit above that level of support. If Palantir breaks through and goes to lower lows, my next buy is never my last buy. I always have capital on the sidelines just in case something extreme happens and one of my stocks pulls back significantly lower from there. For my second example, we're going to take a look at Shopify, which I bought at $50 on August 5th. And if you go back in the past, you can see why I chose that price level. There were a lot of areas where it could have potential support. However, for me, my original buy target was actually much higher than $50. But since it had gapped down at the open, it actually filled my limit order buy at a much lower price than I originally intended. When Shopify rallied less than 2 weeks later, I decided it was time to take profits at $75 on August 16th. And this was a perfect 50% gain from where I'd bought those shares less than 2 weeks earlier. I didn't even sell all the shares that I had bought at $50, but for me, it was prudent to at least sell some of them because a 50% gain in 2 weeks is absolutely absurd. Could Shopify go higher? I hope so. In fact, my next profit target is this point right around here, where you can see that it encountered resistance around $91.21 before it reported bad earnings in February of this year. So naturally, I'm going to sell there. And just like Palantir, where I'm going to buy a little bit higher than that level of support, when it comes to Shopify, I'll sell a little bit lower than that level of resistance. There will be a lot of market participants who are eyeing that level of resistance, including people who had bought there back when it reported earnings in February. And once they get up to break even, where they no longer have a loss, they could very easily dump the stock and sell it back down. Levels of support and resistance are not a guaranteed way that you're going to be able to find where to sell or where to buy a stock. But they're a very easy and inexpensive way to develop a plan for how you're going to invest in a position and take profits over time. To learn more, check out my Substack, getirk.substack.com.